Hello, everyone, and welcome to another episode of UBS Road to the Election, an Election Watch series. I'm really excited to welcome today's guest, Dean Turner, UK economist within the Chief Investment Office here at UBS. Dean, welcome to the show. It's great to have you join us.
Thanks for having us on, Anthony.
Great. So, Dean, let me start by asking you a quick question here. I mean, to kind of get the ball rolling. And as we're thinking about the U.S. election coming up in November, what are some of the key policy areas that you think will be a focus for investors in Europe as a result of the race here in the United States?
So in my mind, I think there's three key areas that investors in Europe will be focusing on. The first will be trade policy, the second will be defence, and the third will be the overall growth of overall outlook for economic growth and inflation more broadly. Now, taking each of those in turn, why is trade policy so important for European investors? Well, we must remember that Europe is one of the most open economies dependent on trade in the world. Moreover, within that, the US is the largest trading partner for the European Union overall. Therefore, any changes that we could see with regards to trade policy, and in particular here, I would mention tariff policy, will be a key focus for investors. With regards to defence, look, Europe has had the message now for quite some time that it needs to spend more on defending itself, especially since the Russian invasion of Ukraine. But post the election, any change in the US stance towards international policy, especially with regards to NATO, may change the speed at which European countries have to increase their defence spending commitments. It's not a case in our mind of, whether this happens. It's just a case of the speed at which it happens. And it becomes a concern because we have to remember that on this side of the Atlantic, for a number of European countries, fiscal space is already quite limited. So it would require quite some shifting around of the numbers. And the third point, more broadly, the outlook for economic growth and inflation. Look, the US is still the world's largest economy, and this will matter in terms of overall investor sentiment, and that will have a knock-on effect for Europe as well. So, those are the three key areas I think we'll be focusing on.
Yeah, and you wouldn't expect any kind of a sizable trade deal between the EU and US, anything changing regardless of who sits in the White House.
No, that's correct. I mean, well, look, from an upside perspective, we also always got to think about there is a potential upside, and the ideal outcome for the European Union would be a trade deal with the US. But that doesn't seem likely. Whoever wins the US presidency. So in my mind, the focus is really going to be on any transformation that we see in existing relations that could be to the downside. Now, we've heard a lot of talk already on this election campaign about the potential for tariffs. We've seen this in previous episodes, and the response from the European Union has been to retaliate to those tariffs. Therefore, this will be an area of concern. But as I said earlier, this really does matter for Europe as an economy that is very heavily dependent on trade.
Right. So, Dean, just taking a look at the individual asset classes, which ones do you think might be most or even least impacted by the election here?
Look, it's always hard to know which asset class is going to be impacted the most from any event. But in my mind, history tells us that you don't have to look far from the FX markets to see the initial reaction in terms of how investors are sizing up the result of any election. Now, look, from what we know at the moment, it will be our expectation that if we were to get a red sweep or a Trump victory with a divided Congress, that could lend itself to slightly higher growth in the US, perhaps. A lot of that could come from deregulation. And that in itself is something that could change the outlook for the interest rate environment. And we're in a market right now where interest rates and interest rate differentials are really being the key driver for currency markets. So under that scenario, and in addition, we must remember that perhaps if we were to see a red-leaning White House, that would increase uncertainty, especially around some of the geopolitics. That would typically favour currencies that have a defensive tilt, and unfortunately for us, the euro is not one of those. So under that scenario, I would expect that we see the euro a little bit weaker. I wouldn't expect that to persist, though, because over the longer term, I think bigger questions will come into focus, especially around the funding of the US deficit, and that could lend itself back towards investors returning towards Europe. But certainly, the initial reaction to a red victory would perhaps point to a slightly weaker single currency in the short term. The alternative, of course, if we were to see President Biden is re-elected, either with a blue sweep or with a divided Congress, that really would signal continuity, and that in itself might actually favour the more risk-on currencies in the world, of which the euro and the pound, for that matter, are in that basket.
Yeah, and going back to what you were saying there about interest rates, clearly there's a little bit of uncertainty around the direction of the U.S. Federal Reserve, which of course really has a large impact on other central banks around the world. And we know that the European Central Bank has already made inroads in cutting rates. So it's an interesting dichotomy to kind of see the two different economic sides of the story and how they really impact each other. So, I mean, I'm sure that has a lot to do with the expectations overall, regardless of who's sitting in the White House.
That's absolutely correct. And, interest rate outlook is really the dominating factor for currency markets. But also, we've got to bear in mind that spreads across to equity markets as well as fixed income markets. So that's really going to be the key focus for investors. Not so much, who's in the White House, but essentially what it means for interest rate policy going forward.
And, on top of that, there's a lot of political shifting happening right now in the European Union. There were some recent elections that kind of shifted a little bit more to the right versus sort of the left, and that was countrywide. And we even had, President Emmanuel Macron calling for, dissolving parliament to go into a snap election. So what do you see as maybe the key focus for international investors, given the political climate that's happening there?
Yes, you're absolutely right, Anthony. The European elections in the weekend just gone did deliver a couple of surprises, and as you said, a shift to the right, away from the Green parties, whilst it was expected, was perhaps a little bit larger than thought. But that said, for all the noise and furore we've seen around the election results, we shouldn't lose focus of the fact that the centre ground actually held much as expected. So at the European Union level, I wouldn't be expecting that there's going to be much of a transformation from the existing situation, especially when it comes to the outlook for policy. So that in itself will not be that larger concern for investors. What it will clearly be a bigger focus for investors is what's happening in France. Nobody expected the French president to dissolve parliament and call for an election. And concerns are very, very high now that rightward shift that we saw in the European elections could be repeated in France, which would essentially be, which would deliver a parliament that's incompatible with the president's objectives. However, I'd be a little bit more cautious about that, and for a number of reasons. And principally amongst those is the fact that the French election system, by having a two-round system, will make it very hard for the right-leaning parties to gain a majority in the parliament. So although we're likely to see the balance of power shift a little bit in France, we're not expecting to see a dramatic change. But nevertheless, it will mean that investors will continue to question the fiscal situation, especially in France. And that's probably worth a little bit of a risk premium on assets there for the near term. I think the other thing I'd say as well, I'm based in the UK, so I can't get off this call without mentioning the UK elections. We have that happening in 3 weeks as well. Fortunately, I think from an investor perspective, this will be less impactful. And the reason for that is that the result looks pretty much a foregone conclusion if you believe the opinion polls. But perhaps more importantly than that, it doesn't really matter who wins this election in the UK from a fiscal perspective, because both of the major parties who are likely to lead the next government have got a pretty firm commitment to keep fiscal policy under a pretty tight leash. So again, I'm not expecting that the UK election would have a big impact for investors. A little bit of uncertainty in the short term, but over the longer term, this shouldn't cause any change.
Right, Dean. Thank you. Yeah, with so many elections happening around the world this year, and some that have already taken place, our politicians have a lot of work to do, and so do the voters. So thanks for filling us in, and great to see you, Dean. Thanks for joining us. And thank you all for joining us. As usual, we want to remind you to visit our website, ubs.com/election watch. Other episodes in this series, Road to the Election, are located there, plus a lot of other election-related content from the Chief Investment Office. And we'd encourage you to continue this conversation, so make sure you are reaching out to your UBS financial advisor. Until next time, I'm Anthony Pastore. We hope you have a great day, everybody. We'll see you soon.